Hi, I'm Melissa Rambaran.
And I'm Candace Milano.
Welcome back to The Build-Up, presented by Brown Harris Stevens and Guaranteed Rate, where we discuss the secrets of building wealth through real estate.
Today we're joined by Henry Washington, co-host of the BiggerPockets podcast, author and investor who's built a rental portfolio from scratch, and now he's teaching others how to do the same. He started with no savings, no credit, and he's turned fear into action using creative financing and consistent deal flow to build a multi-million-dollar portfolio. He's helping thousands of investors across the country learn how to achieve financial freedom and purpose through real estate.
I'm Brian Scott Cohen, one of the top loan originators in the country and the #1 mortgage originator at Guaranteed Rate Infinity. Guaranteed Rate Infinity arguably has the most advanced tech in the industry. Our completely digital loan process makes it easy and efficient for homeowners, from a 15-minute pre-approval to the digital application and through closing. My team and I would love to help you get into the home of your dreams.
From residential and commercial closings to litigation, Romer DeBoss is your full-service real estate law firm. We blend big firm knowledge with boutique-level attention, delivering outcomes that exceed every expectation. Contact us at romerdeboss.com.
Henry, welcome to The Build-Up.
Thank you for having me.
We're very happy to have you here today, and we're excited for this conversation. Lots to talk about. But let's go back to the beginning, right?
Uh-oh.
Yeah. You started with almost nothing, right? You had limited capital, credit challenges, but you acted very fast. So talk to us about how you got into real estate and what was that trigger that made you decide to say, I'm going to do this?
The trigger was I got married, and I quickly started to realize that my lack of savings and poor financial decisions had led me to a not so great financial position. And now that was impacting more than just me. And so I was hindering our ability to buy a home together. I couldn't be on the loan for the home we bought. Well, for the home that she bought and let me live in with her. And then I had a panic attack for lack of a better way to put it. And at 3 a.m. was, hyperventilating and freaking out, thinking I got to figure out a way to make more money because I can't afford the life that I feel like my new wife and future family deserve. And so I started to Google how to make money and side hustles and started to read articles and stories about real estate investors and saw that it was just a bunch of regular people that did it. And my initial thought wasn't, well, I don't have any money and I have bad credit, so I can't do this. My initial thought was, if they can do it, I got to be able to figure it out. So I'm just going to figure it out. And that sounds foolish, which is why I said foolishness, because it's, when you couldn't buy the house you're living in, you're having financial worries, and then you decide you're going to buy houses to solve your financial problems. It sounds silly. And I don't know, man, I just had a peace about it. It just felt like that's something I should be able to figure out how to do. And I made a decision at 3 a.m. that I was going to go figure out how to do it. Because if all these other people figured it out, there's got to be a way to do it. So I just said, I'm going to do it. And I didn't realize at the time, like, how powerful that was. I think a lot of people try things. They say, I'm going to try something. And trying is cool. But when you try, you're going to fail. And when you fail, then your brain doesn't try to help you figure out how to be successful, because all you told your brain you were going to do is try. But I decided I'm going to go figure this out. I don't know how I'm going to do it, but other people are doing it, so I'm going to do it. And so I just dove into research, podcasts, articles. I surrounded myself with other investors. Like, I went to every meetup I could. I talked to every investor I could. I was a pester Pete. I took everybody I could to lunch. Like, I just wanted to talk and be around people. I didn't know what I needed to know, but it wasn't going to stop me from just immersing myself in the business. And that led me to the lead for my first deal. And that led me to having resources to go to when I had that first deal on how to figure out how to get it across the finish line.
Wow. It's a really, really powerful story and somewhat not really similar to our story, but just more of the way that you approached it, where you kind of were like, I don't really know anything about this, but I'm going to figure it out. Other people are clearly doing it. It's not rocket science. That's what happened with us. We're real estate agents in New York City, and we decided to start our own team, after only about a year and a half of total experience. And some people might think, that doesn't make a lot of sense, similar in your case, but we kind of looked to our left, to our right, we had other teams we could have joined, and we're like, this isn't rocket science. Like, we can do this. And so I think it's that sometimes that blind confidence that enables you to reach, a success that you wouldn't otherwise have had. And go ahead.
Yeah, no, I wanted to add too, I think what was important in that, like you said, is the mindset, right? Like if you're saying you want to go out there and try, you're kind of giving yourself an out. But if you really decide on it, that's when you said, like, your brain, you just rewire your brain in that way to just take it all in.
I think people take for granted how powerful our brains are, and that we can do little things that help us solve big problems. Because, mindset is frou-frou, right? People just think they can manifest everything. And in some sense, you can, but it's not that you manifest it and it magically happens. It's that when you manifest something, what you're truly doing is you're repeating it to yourself over and over again. When you're sitting in silence, when you're writing it down every day, like the thought process becomes a part of you. But what that does is it guides your actions. So like if you're telling yourself something every single day, you're writing it down, you've opened up your brain to the idea that is going to be a thing. And so all of the resources and tools and information that relates to the thing you're trying to manifest now become more apparent to you. I tell the story all the time. It's like the red truck. You've bought a car, and then the next day you realize the whole town has the same car as you. And it's not that there's more of those cars. It's that you've now let your brain know that car is important to you. And so it's like tapping you on the shoulder every time you see one and telling you, oh, there's one. So you do the same thing with your mindset. It's not manifestation magic, but by speaking it into existence, you open your brain up to showing you how to do it. And then your actions are guided. I always say mindset is a mental tool to help you remain physically disciplined. If you're telling yourself you're going to do something over and over again, then your actions each day start to mimic the thing that you're trying to accomplish, even when you don't realize it. Like subconsciously, you're doing things that are working toward that goal.
We couldn't agree more. And that's part of why we have this podcast, is to show others who are maybe behind us in the process that everyday people from all different backgrounds and walks of life and no network, money, no money can utilize real estate to build wealth. And so that's why your story is really powerful. And, you mentioned that you kind of worked your way towards that very first deal. So tell us what it was and what that looked like for you.
So one of the mindset tools that I use and that I think is powerful is, like, if you want something, there's nothing stopping you from just telling yourself that you're that thing. Like, you can just say that. And so I was like, I'm just going to tell people I'm an investor. Like, I've never bought a house, but if I don't believe I can do it, then why would anybody else believe I can do it? And I just believe that in this world, you get what you give, right? So if you want something, then you take on the identity of that thing, and the universe will return the things that go with that thing. It sounds silly and elementary, but it's true. So I was like, I'm just going to tell people I'm an investor, and we'll figure it out from there. And so I did. And I got a phone call from a buddy of mine, and we worked at the same office, but he called me and he was like, dude, I need to sell my house, and I heard you're buying houses. And I was like, yeah, absolutely. And he was like, I got to sell it in 30 days because I need the money to go and buy this land. And if I don't buy this land by this time frame, then we lose this opportunity. And I was like, all right. He was like, my house is worth 170. I'll sell it to you for 116 because that gives me the exact amount of money I need to go and buy this land. I don't care that it's worth more. I just need it. I just need this amount of money. He was like, so can you buy it in 30 days? And I was like, yeah, sure. Absolutely. I can. I had no idea how to do it. And so he was like, well, what do we do? since I knew him, I'd been in the house many times. It's a good friend of mine. I was like, all right, well, hold on. and I Googled, how do you buy a house without a real estate agent? And it told me I needed to put the house under contract. And then I had to Google, what does that mean? And then once I figured that part out, I had to Google a real estate contract. And I downloaded a contract off the internet, and then we signed it, which is terrible legal advice. But I wouldn't advise people to do it exactly that way. But I just want to highlight like the mindset I had at the time. So we signed this contract, and he was like, well, what do we do now? And I was like, I'll let you know. And so I figured I needed money, and I didn't know where to get money. I only had $1,000 in my savings account. So I said, I'll go to a bank and see if they'll give me a loan to buy this house, because banks give house loans. And so I went to the bank, one of the banks closest to my office, on my lunch break, with the physical contract in my hand. And I walked in and talked to the guy standing in the lobby and said, hey, I'm looking for a loan to buy this house. And he took me in his office. He pulled up the address, and he was like, man, this house is worth a whole lot more than what you're buying it for. And I was like, yes, that's right. Can I buy it? And he said, yeah. And he talked to me. So he happened to be the commercial agent, and this happened to be a local community bank. None of those things I knew before I walked in there. That was happenstance. And so he said, well, we could give you a loan to buy it and renovate it. You would just need a 15% down payment of the purchase price. So if you've got around, it was like 17 or 18 grand, it was close to 20 grand. He was like, then we could potentially loan this on this house for you. And I was like, great. And he was like, do you have the down payment? And I said, yes. And I did not. But I had 30 days to find it. That's what I did. I leaned on those investors that I had been meeting with over the past 90 days and building relationships with, and asked them a million questions about how to find $20,000 in 30 days, and couldn't find it. And so I called a buddy of mine who's an investor and said, hey, I told my friend I would buy this house, and it doesn't look like I can find the money. So can you buy it? Because he needs out. And he was like, I can buy it. He was like, but if you're going to be an investor, you need to figure it out. It's figure outable. And so he brainstormed with me, and we came up with the idea of using a 401k loan. So borrowing against a 401k. And when you borrow against your 401k, you essentially, it's your savings. So you borrow against it, and then you pay yourself back with interest through your paycheck at work. And so, all the interest you get to keep, and your work essentially manages it for you, and they take the money out of your check typically. And then you get paid the rest. And so we did that, except I didn't have a 401k. So I had to use my wife's, which was cool. So we borrowed against her 401k. We bought the house, we rented it out. It started to pay for itself and cash flow and pay back the loan we used to borrow it. And then the banker asked me if I wanted to take out a line of credit on the equity. And as soon as I finished Googling what that meant, I said yes. And then we took out a line of credit on the equity. And then I had a line of credit of about $30,000. And he was like, so what you need to do is go and find another deal like this. And then instead of you having to come up with the 15% down payment, you just use this line of credit. So then you don't have to use any of your own money. And then you either sell it, pay off the line of credit, or you refinance it, pull the cash out, and pay off the line of credit. And so he was like explaining the BRRRR method to me before there was a fancy term for it. And so that's what I did. I recycled that money and bought probably 10, 12 different properties by recycling that line of credit.
Wow.
Amazing. That's a really great story, and also example of how you could really be resourceful, right? And that was your specialty early on, is just finding these deals and financing them in such a creative way. So how did you structure your deal flow system when you had such limited resources?
I knew at that point that I had access to money, because the lender said, I'm going to give you 85% and you've got this line of credit for your down payment. So you don't have to worry about money. The only thing stopping you is being able to find a deal that pencils good enough for them to want to lend to you on. So my problem then became, how do I find more deals like that, because that first one essentially fell in my lap, right? And so that's when I started to study how real estate investors find good deals. And so at that point, I just started to study wholesalers, because my research told me that these are the people that are really good at finding deals. I did not want to wholesale. I do not wholesale, but I figured if I do what they do, I can just get the leads and keep them for myself. And so I set myself up to be a direct to seller marketer and figure out how to do direct mail and figure out how to do pay-per-click and SEO. And so I studied all of these methods. I picked the one or two methods that I thought I could do comfortably and consistently. And I just started to do it, and it started to produce results. And that's how I ended up buying those deals. So I guess the answer to your question is, like, if you want to be an investor, there's two problems you have to solve. Any investor in any category, right? Like, doesn't care if you're doing single families, multifamily, like, you're going to have to figure out how to find a consistent flow of leads for deals. And then you're going to have to figure out how to find money to buy those deals. And if you solve those two problems, then you grow your business at whatever pace you're comfortable growing your business at, right? If somebody called you and said, I've got 3 houses for sale in a market you love that you're going to buy at a 40% discount, and I'll lend you 100% of the money, you're going to buy those houses, right? Like, so if you can solve those two problems, then you can grow. And I knew the money problem was solved. And so I just needed to solve for the deal problem. And that helped me get good at finding deals. And I still do the same things today.
I love that. Yeah. And as your portfolio grew, the way you probably evaluated deals changed, right? From the very first deal to how you're doing it today. So how did that evolve, and the way that you evaluated deals and also managed risk?
To say that a little differently, how I evaluate deals hasn't changed. The numbers, like how I comp a deal, how I decide what I'm going to pay for it, is always the same. In terms of the structure, but the variables within the structure will change based on what the market is positioned for. So right now, it takes longer to sell properties if you're going to flip it. Right now, interest rates are, not what they were a couple of years ago. They're coming down, and that's good. Insurance is higher. And so all of those things I adjust in my underwriting. So your underwriting, I think, as a real estate investor, always has to adjust given what the market is telling you. But the formula has always remained the same for me. The formula has never changed. I underwrite everything the exact same way. I just now, instead of budgeting for 6 months of hold time on a flip, I budget for 8 to 10 months. Even though I can get done in 90 days and list it, it may not sell for another 3 or 4 months. So I need to give myself that cushion, right? And so it's just a matter of adjusting the different factors within the formula or the underwriting, given what the market is allowing for.
Right. And that's a good way of putting it, of, really thinking about those risks. But how do you navigate those? I know you talked about, obviously just looking at the market as a whole and see what's happening, but how do you navigate through that?
The market that we're in now requires us to be more diligent about understanding what's happening within your real estate market. 3 or 4 years ago, it didn't matter. You bought something at a discount, you added value to it. Somebody was going to buy it. They're probably going to overpay you for it, and you'll make money, and amen, everybody's happy. But now it doesn't work like that. You have to be solid at your business. You have to be efficient with your renovations. You have to know what to renovate and how to compete, because there's so much competition on the market. What finishes make sense for what houses and what markets? So you need to be paying attention to your market. What's selling? Like, you can have your agent pull the comps, and they can specifically show you of the last 10 sales in this neighborhood, these 5 sold the fastest. Let's look at what they had. Why did they sell the fastest? And then you can position your property to have similar, features, if you can add them. Some, if they have a pool and yours doesn't, it's hard to add that. Or if they have a $1 million lake view and yours doesn't, you can't add that. But it's a feature inside the house, right? Those are things you want to be positioning for. So you need to study your market a little more than you used to. And then you need to study the metrics of your market to understand how to underwrite. So you need to know what's average days on market. You need to know, what the list price to sale price ratio is in your market and track it month over month so that you can understand how to underwrite and how to list your properties for sale. Because even though I might underwrite a property to sell for $350,000 because that's the max ARV, when I go to list it, I may list it for $325,000 depending on what the competition's listed at, because I want to make sure I get all the eyeballs. And so I don't want to be the highest price home. I want to be somewhere in the middle and look the best so that people choose to go see my home. And that means I maybe have to price it a little lower. So you have to truly study the metrics of your market. So I'd say pay attention to list price to sale price ratio, pay attention to average days on market, pay attention to total inventory. So track your total inventory. How many months of inventory does your market require before it's a buyer or a seller's market? And then track that month over month to see if that number is getting bigger or if it's getting smaller, so you can understand when the market starts to shift and how to price yourself appropriately.
Yeah, that's a lot of really valuable insights and a great way of looking at things. Just in closing here, we really want to help, new investors really take action. Because like a part of your story was all about, just taking the action and getting started. So what's one piece of advice, or where would you advise a new investor to get started today?
I'm going to share a few things. First and foremost, yeah, my story sounds silly, but essentially I was going to go until someone with some actual authority told me I couldn't go anymore. Does that make sense? So like, I'm going to try to buy this house until someone who can give me the money says, I cannot give you the money. And this is why, right? Or you cannot do that. And here's why. I think too many times, all of us, not just new investors, but all of us, experienced investors do this too. We make decisions for other people about our wealth. So we'll say, man, I want to do this deal, but my finances aren't there yet. My debt to income ratio is not where it needs to be, or I got to get my credit score up a little more and then I can go do that deal. How do you know? Did you call 10 banks and ask them all to look at this particular deal or situation and they all told you that? Or are you just making the decision because you're too embarrassed to call them because you don't want to get told no? Like, we have to go and do. And let the people who can actually stop you tell you that you can't. But when they do that, you're now going to know what to go fix specifically so that you can move forward. It gives you a mitigation plan. So stop deciding for other people that you can't do something. That's silly. The second thing is focus on the lowest common denominator if you're new. A lot of investors think, well, I want to flip a house, or I want to buy a rental, or I want to buy an apartment building. And those are all exit strategies. Those are all ways you monetize a deal. And in order for you to do any of those strategies, the lowest common denominator is you need a deal. You need something that you can buy low enough that you can add value to, that you can monetize. So don't focus on the exit, because that's overwhelming, because you'll analyze a bunch of different things and you'll only put in offers on things that you think make sense. No, you need to be searching for a good deal. So you need to forget the exit and figure out, what does a good deal look like in the market that I want to buy deals in, period. What does that look like? Does it mean I need to buy at 30 cents on the dollar? Does it mean I need to buy at 50 cents on the dollar, 60 cents on the dollar, right? It's going to be different in every market. And then once you know what a good deal looks like, then go figure out, pick one method for finding deals. It doesn't have to be direct to seller. It doesn't have to cost money. But understand that whatever method you pick, it's going to cost you either money or time. You can find deals on the MLS, but you're going to have to make a lot of offers before you get a really good deal, which takes a lot of time. You can find deals using direct mail, but you're going to have to spend a round amount of money to send the right amount of mail for it to produce a result. So figure out how much money or time you have each month to put towards finding deals, and then go to ChatGPT and say, I need to find a deal in XYZ market. I've got $2,000 a month and 2 hours a day. what deal finding methods would allow me to reach the most amount of people with the budget I have. Pick one strategy and do it until it works, because they all work. Mail works, cold calling works, knocking on doors works, offers on the MLS work, agent outreach works. Pick the one that you can afford to fund appropriately. Do it until it works. Period.
Wow.
Amazing.
That's really, really powerful. Thank you so much, Henry. We've learned a lot. I know our listeners have. So we couldn't appreciate your time more today.
Thank you so much. I appreciate it.
When we first started Excel Real Property Management 11 years ago, we did so with the intention of protecting the investment community. Here at Excel Real Property Management, we focus specifically on serving the needs of individual apartments, townhouse, and small multifamily building owners both in Manhattan and select neighborhoods of Brooklyn. Our services encompass everything: rent collection, expense payment, handling maintenance and repair, turnover between tenants, insurance needs. Literally anything that an investor would typically handle him or herself, we take care of for them. Whether you hold one individual apartment or a rental building that houses 20 units, Excel is here to help with all of your specific needs.
What do you really need to know about buying or selling a home? First, it's serious business. And it's complicated. There's a lot of money on the table, and emotion too. You need an agent who knows the ropes. So, whether you're buying or selling your home, work with professionals who have a mastery of the craft. What do you really need to know about buying or selling a home? First, it's serious business. And it's complicated. There's a lot of money on the table, and emotion too. You need an agent who knows the ropes. So, whether you're buying or selling your home, work with professionals who have a mastery of the craft.
So here's a topic that we've talked about before, but it's back in the headline. Families are leaving the big cities and they're heading to the suburbs.
Yeah, I'm not surprised. Redfin's 2025 migration report that just came out shows that 40% of home searches are now outside of those buyers' metro areas. So we're definitely seeing an increase in buyers looking beyond the cities back into the suburbs.
I get it, and I'm not convinced, though, that this is a permanent shift. As we know, historically, a lot of people, they flee the big cities when there are a lot of distress, such as high interest rates and of course, high prices, but they often come back.
Yeah, they do. Although it's also interesting to recognize is that Americans tend to equate quality of life with space, greenery, and a low density environment. So that's not cyclical. That's just somewhat of a cultural belief.
But of course, you know, with the hybrid work that we've seen recently, it does make it feasible. You get the best of both worlds. You can commute into the city, but you also have, again, the lifestyle of the suburbs.
Yeah, another way to kind of track where the demand is going is follow where construction's happening, because builders are going to go where there's demand. And right now, we're seeing a really big uptick in construction of single-family homes in suburban areas.
That's fair, but suburbs also have its own challenges. Like I mentioned, the commute time to the city, and of course, the limited restaurant access, nightlife, and fewer amenities overall.
I get it. Yeah, the lifestyle of the city usually outperforms the suburbs, but overall, when people are looking for good schools, backyards, safety, is another big consideration for families and just buyers in general. Like the cities, unfortunately, can't compete with that.
Mm-hmm. Until affordability improves, that migration push is real. We'll definitely have to follow that trend and see if it's going to become a permanent shift.
Yeah, either you're going to get urban energy or suburban comfort, and there's different seasons of life where one is more appealing than the other. So Usually those leaving the city are either young couples looking to start a family, or maybe they have children already who are looking for more like what we discussed, space, safety, good schools, things like that. Or when they make their way out of the city, we find that there's new people coming in who are looking for, proximity to city, lifestyle, jobs, all of that. So it's somewhat of a recycling.
Right. And so maybe the truth is cities aren't dying and suburbs aren't winning. It's not a competition, right? Yeah. It's just really defining the way people look at what a good life is.
Correct.
This wraps another powerful episode of The Build Up. Henry reminded us that success starts when you take action, even when it's scary. If you found value here, don't keep it to yourself. Subscribe, share, and come back next week as we continue exploring how to build wealth with purpose, one conversation at a time.
This podcast is for informational purposes only and does not constitute tax, legal, or investment advice.
For specific recommendations, please consult with your financial, legal, or tax professional.
Your phone or always leaves your text on red? Leaves your text on red.
Built the courtroom group with $1,000 loan.
Tell us a little bit about how you actually came from.
Welcome to The Build Up, John Rowan.
Thanks for having me.
We're coming to you here from Studio 1873.
It's not 57% over 2.7 million.
So then, cheers.